Okay,
Well,
can you hear me?
yes, we can hear you loud and clear, Magda. Magda Wierzycka from Sygnia. Good to see. I can even see you on the screen, so that's so wonderful. I can assure
Yeah,
you, it's
slightly technologically challenged here, so hold
all
on, I'm
right.
going to lift this a little bit so that the visibility is a little bit better.
Excellent, excellent. Just to make sure that Stuart Lowman is our managing editor. He's in Johannesburg. Stuart, do you want to just go through the technicals, just make sure everybody can hear us, etc.?
Excellent. Thanks, Lotte. Welcome, Magda. Good to see you. Those listening, if you can just, there's a little virtual hand that you can raise. If you can just raise that, that means you can see Magda and Alec and you can hear my voice. You can see some hands from those attendees. Excellent. They're coming through. And obviously, we do try and make the webinars very interactive. So there's a little questions bar on the control panel on the right-hand side. If you slot those in there, Alec will pick them up as we go through the discussion with Magda. But over to you, Alec.
Wonderful. Magda, what I'd like to do, just go through a few slides first, and then bring you into comment on this incredible disaster. You can't see the laughing matter, but it's almost laughable. It's so crazy, isn't it? So maybe if we can pick up with that first, and then just go on to the Stuart. Can you confirm that the presentation is showing?
Yes, the presentation is showing, Alec. Thanks.
Okay, well, there's the guy who at one point in time was the leading entrepreneur, or one of the leading entrepreneurs in South Africa. I just wanted to show a couple of things. Magda, we can hear you, so if you want to jump in and just discuss it. This is the share price of the Steinhoff share price, and I put this. Well, let me do the other graph first. This is the share price in the last few days. Okay, there we go. From Steinhoff share price, as you can see, it was going along quite fine up until the 1st of December. Then on the 3rd of December, it started tanking, and the 5th of December, it really plunged. And you've got a similar situation there. We're going to talk about that in just a moment. And then the other thing was the volumes. Now, if you look at the volumes on a longer term, you can see that the critical day here is the 6th of December. That was the Wednesday when the announcement was made that Markus Jooste was leaving the company and that they'd found new information, which got everybody in a panic. But it doesn't look terribly untoward in that context. Huge volumes of shares traded on the 6th, the 7th, and the 8th. But then look at this. This is just before the shock hit the markets on the 4th and the 5th of December. Now, when you look at that, it looks terribly untoward. It looks like somebody knew something that nobody else did, a little bit of insider trading, etc. However, and just stop and look at this graph a little bit. On the left-hand side, you'll see those are the normal volumes in the Steinhoff share, and then suddenly you had that spike the 2 days before the big news hit on the 6th of December. But this is a very dense graph, and I don't really want to go through each one of them, excepting to highlight two things. From the 24th of August onwards to the 4th of December, there were announcements coming out conclusively. For instance, if you look at the first one, legal and external audit firms in Germany have concluded that there's no evidence of any contravention of any provision of German commercial law, and so on. They're confident the appeal will be dismissed, and so on. And then on the 9th of October, and I put this into red, Director Thierry Guibert sells shares worth 1.1 million euros. That's 17.6 million. Now, he is the French director who came when they did the acquisition in France. If you recall that the big French retailer that came into the Steinhoff group. And then it did a big share buyback on the 24th of October, 5 billion rand. Ben Legrancy, the group financial director, bought shares in a personal capacity, which for him would have been worth a lot of money, of 4 million rand, lots for normal people, at 60 rand a share. And on the 6th of November, Christo Wiese opened a single stock future position of 123 million rand. He's basically lost 100 million of that at 61 rand 46. Again, they clarified on the 8th of December that the reporting was wrong. Again, they were confident that would be the petition to Enterprise Chamber will be dismissed on the 20th of November. Now, these are all statements that were issued to the Stock Exchange News Service, to the investment community. And in the 4th of December, this is last Monday, confirmed that the full year results will be released in an unaudited form, not an audited form. That tells you immediately something was wrong. So you see those clever people who were selling shares on Monday and Tuesday went on this information. And then on Wednesday, the 6th of December, of course, they said it would, the numbers would come out on the 6th of December, but they also said on the 4th, on as recently as Monday last week, no additional information came to light to change the previous views regarding the German investigation. And I wanted to start with that because that really does give us a good insight into the story that's being told to investors over the last little while. The information that the investment community has been getting, and you can hear it, you can see it very clearly that the consequence of all of that, of course, has been very different. Well, warm welcome to Magda. She's here to answer your questions, so you can start sending them through now. But let's just start off with that that tale of woe that I put on the screen there. As I said, Magda, very dense, but it is a continuous, almost litany of what now looks like denials after denials.
It is denials after denials. So, you know, the rumors and news of legal issues and tax issues around Steinhoff have been circulating for well over a year, and investigations. So that was kind of in the public domain, with management denying that there were any, you know, problems. And the asset management community seemed to have believed and placed enormous amount of faith in what management said. You know, when you look at the actual trading activity, okay, so if you look at the 5th and the 6th, I think that's speculation. And, you know, by the 6th of December, 40% of Steinhoff shares between South Africa and Frankfurt were lent out. So there were, you know, huge shorting positions taken out on Steinhoff share. So people on that news on the 4th of December already made a call that, you know, things are looking dire. You know, and it's a very strong statement to say that you are unable to release your results, you know, even if it's an unaudited form. Well, unaudited form means I'm putting up a spreadsheet that I have prepared. It basically means the auditors are unable to confirm the numbers that I'm presenting. There are many questions to be asked just in that little nugget, because, you know, an audit typically starts much earlier. We also have, you know, kind of interim financials that should have been subject to a lighter version of an audit. It's not a full audit. So, you know, one needs to ask some very serious questions of Deloitte and the role that they've played in all of this. But, you know, if your auditors say that they are not willing to sign off on the numbers, then, you know, that is a very firm indication to most professional investors that, you know, things have gone pear-shaped. And I think that's why you're seeing the sudden spike in trading activity. And then, of course, two things happen. You know, there are people with true understanding and people with no understanding trading. So people with true understanding would look at something like this and go, okay, we need to short. People with little understanding will see a share price, which, you know, the graph you showed with this share price being almost like a Ponzi scheme share price, you know, continuously going up. Well, this is a short period of time, just November, but, you know, if you look at it over a longer term horizon. And so as they see that share price going down so rapidly, they start taking punts on the fact that, you know, however bad the information is, it cannot possibly be as bad as what's reflected in the share price. And in fact, the share price will bounce. So all through that down cycle, you will see sellers and you will see buyers and you will see people who are still believers in Steinhoff, so they're doubling up. And, you know, I have to be perfectly honest, before I kind of started digging, and, you know, I don't make it my own, you know, it's not in my job description, thank goodness, to analyze companies. But when on that Wednesday I saw the share price take a dip to, you know, 15 Rand, just before the markets closed, you know, I do have the benefit of owning a stockbroking company in the group. So I found a stockbroker and I said, look, just buy some Steinhoff shares, you know, in my private capacity. Things can't be as dire. Markets tend to overreact to bad news. There will be a bounce in the next day or so. And then that evening I went home and started digging and looking at numbers and looking at some research reports. And literally at 5 o'clock in the morning, I sent an email on Thursday morning to my dealing room saying, the moment the JSE opens, sell everything. There isn't going to be a bounce back.
What got you? What got you thinking that way?
And so I didn't know. So I was one of the punters without knowing, anything beyond what an average investor knew about Steinhoff and the people involved. I was taking a punt, which is a terrible way of investing, by the way. You should never do that. It's literally you invest with no knowledge, and you're investing on a short-term basis on the expectation that the market is overreacting and you will be able to exit the position within a short period of time with a slight gain. And it's a trading strategy rather than a portfolio management strategy. So I would never recommend it to anyone unless you're a professional trader, because you'll typically find yourself on the wrong side of that trade. But what got me was obviously having bought some of these shares and now starting to see the media reports. I went home and I started looking. I started looking at the websites where you typically find financial information. And, it amazed me how a company of such magnitude had such poor financial disclosure. So there was so little information, enormous amount of very pretty marketing reports. So if you look at the results, and the format of the results, incredible amount of pretty pictures of, companies and colorful graphs and colorful things telling you absolutely nothing. So when I started trying to find the numbers, I struggled. Then when I found the numbers, they were all in vastly kind of consolidated form. So I couldn't strip out the divisional numbers. So I couldn't figure out, what made money, where the money was being made. You were looking at consolidated large numbers, 5 billion euros in revenue, 3 billion in operating profits. But that's not enough to make investment decisions on. So then I started just Googling. And through that Googling process, you start coming across the legal case, you start coming across the tax authorities investigating, and then you start coming across commentators, sell-side analysts, smaller portfolio managers talking about tax avoidance schemes and tax issues that the company has, potential for inflated revenues. I came across this report produced by a small research firm in the US, and there's a lot of criticism of that report, but really that report read like a horror show of off-balance sheet vehicles which have been set up. And it seems that the sole purpose of these vehicles has been to book over some loans and and potentially some liabilities, and to generate or create cash flow onto the income statement of Steinhoff Group, which would swell up the income line, but that there wasn't an associated cash flow.
Just explain that, Magda. How off-balance sheet? That means it's not disclosed in the financial statements. That's the one could understand.
Two things. So, not disclosed in the financial statements, so it doesn't form part of the group. And yet, when you looked at the nature of these vehicles, they should actually be consolidated in the financials. So for instance, one of those off-balance sheet vehicles, all the trademarks were transferred from Steinhoff International into one of those companies registered in Switzerland. Now, there are other, Richemont uses a similar tax structure, but then the company concerned, which owns these brand names and then leases the brand names back to Mothership, is owned by Mothership. Whereas here you couldn't establish the ownership, and eventually when the ownership of that particular vehicle was established, it turned out to be owned by known associates of Markus Jooste and Christa Wiese. When I see the term known associates, I always immediately think of the Gupta leaks. And so now you look at a company like that, which owns all the trademarks, and you go, how is it that that company does not form part of Steinhoff? It just inexplicable. So is something being siphoned off? Is something being hidden? How is that even vaguely allowed? Then, the other things about it were this kind of frenzied pace of acquisitions. And, I've bought companies in my business career, much smaller than what Steinhoff was buying, and it takes you ages to, one, understand the business, to look at synergies, to look at cost-cutting initiatives, to actually get to know the management, to figure out what the business actually did. Because what you discover in a due diligence is usually fairly superficial. It's only when you own the business that you can truly lift the skirt and see what's there. So, that takes months, whereas Steinhoff was just acquiring things, taking on massive amounts of debt and acquiring things at a increasingly rapid pace. So that made me think of, a typical Ponzi scheme. So, where every Ponzi scheme never starts off as a Ponzi scheme. Well, few. It usually starts with a mistake that you then try to cover up. So, I then started, and I could be wrong in this assumption, but, I started thinking along the lines of, okay, you make your first acquisition and you find out that it's a dog, you take on debt and you find out that the profit line is not sufficient to support the debt, the true profit line, once you've stripped extraordinary items and so on. So then you make another acquisition, bigger, faster, in order to potentially fill the hole. If the second acquisition isn't successful, your hole is now bigger. So you buy a third thing and a fourth thing. And when I looked at the pattern of these frenzied acquisitions, that's what I got a sense of. Mm-hmm. That someone is trying to cover up missing cash.
It's so easy to look at it differently, and the different look would be because of the political situation in South Africa, some people are desperate to externalize assets at any cost. And we saw that with Christo Wiese's acquisition of New Look, which this is bad, but New Look was a 35 billion rand flop. It's what he paid for it in Brait, and it's worth nil today, maybe even negative. Mm-hmm. I hear what you say about the Ponzi scheme, but I guess the counter argument would have been they were desperate to externalize from South Africa. They thought South Africa was collapsing, in their view, maybe, and which you can kind of understand. You might not agree with it, but you can understand. And then the other thing was the business model that he'd always preached was, from the early days, was vertical integration. We grow the trees, we make the furniture, we sell the furniture through our shops, we get it there through Unitron. So if you understand the story, then you can, or if you buy the story, you can kind of believe it. He's had quite a lot of luck along the way, buying cheap assets along the way. Right in the early days, they got a very cheap asset. They got the very good asset in France as well, and so on. And then they didn't go ahead with Darty, you might recall, and with Homebase in the UK as well. So there's for all of this, it wasn't that easy to in other words, there were a few counterbalances that it wasn't an obvious. Sorry, not obvious, but looking back at it now, it looks yeah, in hindsight. But at the time, you kind of scratched your heads and okay, benefit of the doubt, maybe.
Potentially, but look, I'm a great believer in vertical integration. But and that's how I've always built. I've built Sygnia on this concept of vertical integration. But vertical integration relies on the fact that you find a working relationship and establish a working relationship between the companies that you are buying and integrating, or whether you're building or buying. And that, building up of that relationship between companies, the supply chain management, the synergies, the potential for cost cutting, that takes time. It doesn't happen at a frenzied pace. So there is no vertical integration by simply throwing a whole lot of things into a bucket and hoping that somehow miraculously it works. It takes, quite a lot of hands-on management to vertically integrate businesses. And, there is no sign of huge amount of hands-on management. Obviously, since we have tried to do more research by speaking to various asset managers, obviously, I've used the words gross negligence. So that has made the entire active asset management in South Africa very nervous of me and very popular. But you know what question I can't get an answer to? And this might surprise you. How many people work for Steinhoff International, the holding company?
At the head office? I think 20. I remember Markus Jooste often saying that he was trying to do the Warren Buffett approach of a small head office that would then negotiate transactions, really, but that everything else was decentralized. That was my understanding of it, but I might be wrong.
Well, we spoke to a number of asset managers today, and we asked them, have you ever visited the head office? I mean, they're very keen to tell you about how how they kick the tires, they visited the operating entities, but not a single person we spoke to actually visited the head office, and hence they were very vague. So you know more than some of the active asset managers that we spoke to in South Africa today, who actually had no idea. They knew it's a small team. Wow. Now, if it's a small team, who is doing the vertical integration? Who is actually managing the process? Because, again, I look at Sygnia, which is very much of a vertically integrated business. We do everything ourselves. You capture every bib in the value chain, but you need heck of a strong management team to manage that value chain. So if you're telling me there are 20 people at head office, and portion of it is that property assessment team that they established, that sounds like what? Few people in the room buying ginormous. So who's doing the due diligence on these businesses that they're buying? Because they buy.
Yeah, that answer was I asked the same questions on numerous occasions, and that answer was the due diligence was done over many, many years with the people. Again, using the Buffett philosophy, where he buys the people, he buys the management team, and then does the acquisition. The part of that argument as well was that's why Steinhoff pulled out of the two potential deals that it did, which were turning hostile, and it also fits quite nicely with the philosophy that they would be borrowing lots of money at low interest rates. To his credit, Markus Jooste made that call a long time before anybody else felt that interest rates would stay this long for a long time. Whatever else he's done, he made that call some years ago, and he said he doesn't mind borrowing to the hilt because he thinks interest rates will be very low. So that was kind of his whole strategy. But we don't know where it went wrong and where the Ponzi scheme, as you've described it, started. I have other information that it only started now with mattress firm in the US. That's some people suggest that that's what happened. It was okay up until that point, but clearly what's coming out now is it would suggest that it has been around for a while.
Well, the numbers are just ginormous. So there is a £6 billion hole. And again, we spoke to all the asset managers. They point to all the research they have done. And it's interesting that a lot of that research is questions posed to management and answers accepted. Mm-hmm. Mm-hmm. So there is much less scratching under the bonnet and a lot of reliance on, yes, we asked some very tough questions, but, management always had such good answers. Mm. So there was a lot of that. Not a single asset manager, and perhaps they can't, but not a single asset manager could, even those that we employ who pride themselves as being stock pickers with a forensic accounting bias, can figure out right now, as things stand, where this fraud was committed. So no one actually knows.
Do you have an idea?
Look, I don't. I think it's on multiple tiers. Look, how are frauds committed? The numbers are inflated. So what is inflated? The revenue line, they only use three material numbers. You've got the revenue, you've got the liabilities, and you've got the profit line. I think the value of the assets is easy to establish, relatively easy, even if you write down some of the assets to zero, because you know what those assets are. But so what can you do? You inflate the revenue line artificially, so you just make up the numbers. You deflate the liabilities line and the expense line, and that you can do through a variety of different things, be it tax avoidance vehicles, be it booking, losses into different entities. So you're literally making up the numbers, and then as a consequence, inflating the profits. And then, high PE is applied, or relatively high PE is applied to those profits. So I'm not talking about PEs of 20, but, PE of 15 is applied. And that gives you that multiplier effect, which gives you the market cap of the company. Mm-hmm. So it's hidden in those numbers, undoubtedly. But what is hidden?
And where? Because if you had a guy who's had lots of experience, he's in his 70s, Christo Wiese, and he didn't pick it up, well, or either if he did pick it up, he's got to be the dumbest guy on earth to take 123 million rand single stock futures position a month before it all imploded. But somewhere we'll find it. I'm sure it'll come out.
It will come out. Or he did it to restore confidence. Sure. He's buying these. Like he doesn't actually have to put up a lot of cash. I don't know. It's not. It could be a sign of either. What I find very hard to believe is that the board of directors, which consists of some very, very experienced business people and CAs, did not pick anything up. And I find it very difficult to believe that the audit committee did not pick anything up. And of course, very hard questions have to be asked of the auditors again, because clearly whatever risks and controls they were supposed to apply only kicked in this year, or only kicked in now. So there are, enormous amount of unknowns in this whole equation.
I'd like to throw something to you there, Magda. A guy I know quite well, he used to lead the audit on our company when we were public, said that you should have a look at when Steinhoff listed in Frankfurt, because the audit would have then moved from Deloitte South Africa to Deloitte Germany. In the first year, he says it's likely that Deloitte Germany would have really just gone along with what Deloitte South Africa had told them, but in the second year, Deloitte Germany would be very much involved. Is that a viable possibility?
No, but I think auditors are auditors. They check the numbers every single year. They compare the numbers to previous year's numbers. So I don't think that the switch of auditors, in fact, quite the opposite. When you switch auditors and moving auditors between two different countries, would actually mean that the new team on the audit would apply double the effort in order to understand the business, as opposed to a team that's why they've now introduced mandatory audit rotation, and certainly we've always had mandatory partner audit rotations, because once you become too close to an audit firm, there is a risk that they start lacking objectivity. So I don't, I can't believe that it's in the switch of the auditors. But there's some interesting things about, which I learned about Frankfurt listings. So that Frankfurt doesn't have a closed period. So in South Africa JSE, we have a closed period where the moment we have information about the financials of the company, we are precluded from dealing in the shares until such time as we have released the financials. Because obviously that, we could inside trade on the information.
Correct.
So Frankfurt has absolutely no closed periods. The other thing about Frankfurt that we were told today by one of the asset managers is that, despite the fact that you think of Frankfurt as this ginormous international exchange, it's an exchange which has listed a lot of kind of private family vehicles and small caps and illiquids. So it's not necessarily, the same type of an exchange as the JSE is, or the London Stock Exchange, despite being located in Germany. So it is one of the kind of sideline exchanges.
Interesting points. Interesting points. We've got a lot of questions, so if I can start throwing some of them at you. First one is, how can it be that so-called top businessmen got away with this nonsense without detection by the auditors? My assessment is that Deloitte made a stand only after there were rumblings in the media about the German investigation. Do you agree?
I agree. I agree, and hence, a lot of questions have to be asked of the auditors in terms of what quality of an audit was performed, and on those numbers and what they actually did for Steinhoff. What was the scope of the appointment? So, all of that will come out in due course. But I think that you will find that if this thing, and every indication is that it's longer in nature than, just the last 6 months. If it is, then they're liable. Then I've got no doubt that they carry liability.
Well, you just have to look at that statement, the SENS announcement on the 24th of August. I refer back to it. Legal and external audit firms in Germany have concluded no evidence of any contravention. So that is what it is. The follow-up to that was, as above for KPMG, they only fired the Gupta companies after major rumblings in the media. It's quite interesting that this Steinhoff smell, if you like, has been around for a while, as we've seen, certainly for the last 6 months. Whereas the Gupta leaks were a lot more explosive, and you certainly played your part in that with KPMG. But I suppose the media's role in this has to be questioned. Both our role here in South Africa. Why did we not ask more questions here? Why did we believe management in the way that we did? And also what came out of Germany is a bit like a Hansi Cronje moment in many ways. We didn't believe it in South Africa because it was foreigners who were saying things.
Indeed, and look, not only foreigners. I mean, that's the interesting thing. Look, I do believe that we've got a bit of an, cult personality issue in South Africa. So when you look at, these businessmen who have made billions and billions of rands, you tend to think of them as, having this Midas touch. And they can do no wrong, even if some of the stuff that they do is quite shady. So for instance, one of the managers, and I don't want to be sued for defamation, I'm not going to name the manager, and I'm just, saying it, as hearsay, said to us today that Christa Wiese is well known for, front-running shares and potentially trading on insider information. So one of the managers said to us that they actually observe directors' dealings quite carefully because he's always been known to inside trade. That was very cheerful for me to hear.
Sure.
But directors' dealings are publicly disclosed. So, in theory, the manager in following directors' dealings is not doing anything wrong. The fact that they're happy to invest in companies run by someone who is known to participate in insider trading activities, well, it's back to those ESG factors when making investment decisions.
If you've done that research and that's your conclusion, and we can't, as you say, it's hearsay, so we can't say it's true or false, but if you've done that research, then surely you should be acting on it. Also, now that you mention it, there was a Sunday Times story a couple of years ago ahead of the merger with Pepkor, where there were many Steinhoff executives who were mentioned for insider trading, and that just seemed to go away. So we just assume, I guess, on the outside, we just assumed, well, they had a logical explanation, but I'm sure those kind of issues are now going to be reopened again, because when trust is broken, isn't it so, Magda, that you question everything?
You question everything, you believe nothing. I don't think, you can take a lifetime to build a reputation and destroy it in 5 minutes. And I don't think you recover from something like this, by the way. But, back to that cult personality, I think people in South Africa have a tendency to look at, and perhaps it's a function of, this huge wealth disparity in this country, but, they have a tendency to look at very rich people and just blindly follow them, whatever decisions they make, without potentially scratching beneath the surface and possibly, accepting shades of gray in business dealings by the individuals concerned.
There's a question here which follows up quite nicely to say, are there any genuinely honest businessmen? I suppose we should say businesswomen as well. We've had a few of those, but are there any genuinely honest? Of course there are. Of course, aren't 90% of us honest and only 10% of humanity not?
Well, maybe 90-10 is a little bit positive and optimistic. Look, I think in South Africa right now, you know, we're living through this kind of extraordinary time where over the past 10 years, you know, questionable business practices have become the norm. And Zuma has effectively institutionalized corporate corruption. Because remember, for every rigged tender, there is a public sector and a private sector participant. Mm-hmm. He not only institutionalized it, he encouraged it. And consequently, you're now finding, you know, the most reputable of companies, you would think, embroiled in paying. Because, you know, it's so much easier to pay a bribe and have the legislation changed in your favor than to comply with onerous legislation. It's so much easier to pay a bribe and win a tender than go through an honest tendering process. And Zuma and his modus operandi has made this all right, with a sense of, you know, lack of prosecutions of any kind and lack of accountability. And so I think people who started bending the envelope a little bit got bolder and bolder in what they were doing. And certainly, you know, when you look at someone like Markus Jooste, I'm quite sure that if you questioned him a week ago, he would think of himself not as someone who is crooked and corrupt, but as someone who is clever. I'm quite sure he slept well at night, as opposed to agonizing over this. Because I think people convince themselves that, you know, what they're doing is not necessarily, well, you know, it's clever. Mm. Maybe it's shades of gray, but it's clever. And that hubris and arrogance just grows.
Another question here. Did Alec follow his own advice from his book on investing in the JSE? And if so, how did he come to the conclusion that Steinhoff should be in the champions portfolio? Well, I made a mistake. Fortunately, it was a small percentage. And fortunately, we're still in front. We're still in front for the year. I'll go through that a little bit later in this webinar. But from everything I saw from the published results that were given to us, everything looked like it was a good value investment. And the purpose of the SA Champions portfolio is to invest in companies that are based offshore. You don't really have a huge variety to choose from in the JSE, but from what I saw in the balance sheet, and it makes me not, it doesn't excuse it, but there were many others who felt the same way. In fact, only a month ago, the banks in Europe put in 800 million euros behind this company, and even the European Central Bank invested into this company.
And let's also, you know, quote some statistics, you know, in defense of, you know, active asset management. Although I'm a big believer in index tracking, but in defense of active asset managers, you know, a very, very good active asset manager only gets 65%, and that's kind of statistical studies, only gets about 65% of his calls right. That's a superb asset manager. So, you know, unfortunately, you will always invest in some dogs. At any given point in time, you've got to assume that there is a percentage of decisions that you have made and shares that you're holding that are not going to be the winners of tomorrow. And that applies to long-only, standard traditional asset management, as well as to private equity portfolios, where these guys, you know that if they get 2 out of 5 wins in terms of, you know, this kind of 20% return over 5 years, then they've done well. So out of every 5 things that they invest in, they expect that 3 will be dogs and 2 will be winners. So I wouldn't beat myself up too much.
Thank you. Views on whether Steinhoff will pull out of this mess?
Look, I don't think so, because I think that we are heading for a territory where the banks are stepping in. So there won't be a Steinhoff. You know, given the amount of debt that that company has on its balance sheet, first of all, Given that Christoph Wieso, and we obviously we're not privy to his financial affairs and his personal balance sheet, but one needs to assume that he leveraged himself to buy shares, and we know that he has in certain instances. When you borrow money from banks, and you do it on the security of shares, they usually ask for anything between 5 to 7 times cover. So really the owners of Steinhoff right now are the banks. The share price is an option price. And the first people through the door will be the banks. And the banks don't have a long-term vision for a company. They are more likely, there's obviously nothing is certain, and again, we just don't have enough information about what actually happened, but to draw completely firm conclusions, and I believe Steinhoff management has a week to come up with those answers for the banks. Usually they will come in and they'll do a fire sale, because the only thing they're interested in is how much money do you owe me, and I need to recover that rent cent amount. Staff equity owners, that's, staff the strategy of the business. We don't really care if the prospects are good or if certain things could recover over a period of time. We want our money back and we want it now. We're not in the business of taking on risk. No bank, unfortunately, is in the business of taking on risk. And I believe that there are some very, very nervous bankers running around London today. Well, yesterday I knew. Who have large exposure, because it's most European banks. I think the exposure of South African banks is fairly modest, but European banks are quite exposed to this. And once they step in and they start selling off assets, well then you don't know what you're going to get out of that. But do I, if I was a betting person, do I think Steinhoff survives as a listed company? No, but that's my bet.
How complicit is Visa? Is another question here.
Well, even so this is the answer. How complicit, actually the question is how complicit is the board of directors? And the litmus test for any board of directors, execs and non-execs, is not about what they knew. The test is what they should have known as directors. So, if they didn't know, that's no excuse. That will not stop regulators from holding them liable. Now, do I believe that Christoph Wieso was oblivious to everything that went on? Absolutely not. But again, I would suspect that he believed that things that were happening were aggressive, so words such as aggressive tax structuring were happening, and that he thought it was very clever. Do I think that he personally would have sat there at midnight cooking up the spreadsheets? Probably not, but I also don't believe that Markus Jooste was sitting there at midnight, by himself in a room, because this is what the market would like you to believe. And many, again, asset managers we spoke to literally painted a picture of the only person that knew was Markus Jooste. So that would imply a guy in the middle of the night in the finance department making up numbers. Now, that's just not feasible. That's not logical, not feasible. We had a bit of a meeting post-mortem at Sygnia today, and we were trying to go through all the, and Sygnia is a teeny tiny company in comparison, but how many checks and controls we have in place, and how impossible it would be for me to interfere with a financial director in place, how utterly impossible it would be for me to interfere without massive collusion by many, many people in the finances and in the making up of figures in the business. It's just not possible. There are so many checks and balances that it's impossible. Unless, I don't know, I broke into the finance department at night and started changing every single, and this is what we are told to believe at the moment. So I find that not particularly credible. So I think more things will come out.
There's a question here from Bo. He wants to know, where is Markus Jooste?
So I believe, I've been told, he's in South Africa. I've been told, okay, there's a lot of rumors, around this. So the problem, the typical, financial criminals in South Africa tend to run for Australia because Australia won't extradite to South Africa because of our jail conditions, so it's a human rights issue. But of course, people who will be after Markus Jooste are not South Africans, it's the Germans. And Australia will extradite to Germany. So Australia is not really a place where you want to run. So I believe he's in South Africa at the moment. That's what I've been told. But, I've been told many kind of unpleasant things about the fact that he's not a personality that will easily accept what has happened. Mm-hmm. And so, some unfortunate things might still happen. But again, pure speculation.
There's a question here from Len who says that people smelt a rat since 2013. I guess that is true. There were. You spoke about it in our interview on Friday about the minority view, and I think it is a very good point that you made there, that minorities are often not listened to in the financial markets.
So, what was interesting is I was reading, some research reports produced by some of the large asset management companies going back, and obviously the moment you speak out, as I tend to do, my inbox gets flooded with emails with people who want to share information, which is great. Please keep sending information. But, it almost appears that up until around, 2 to 3 years ago, most of the asset management industry was quite mistrustful of Steinhoff. And suddenly, when they listed in Frankfurt, the views changed radically. I saw a Coronation report, which talked about the fact that, all of the things that made them worried while the company was based in South Africa, well, the management has now completely addressed it. The change in strategy is absolutely fantastic, and now it forms part of the top 10 shares. So the view of large asset managers seemed to have changed, say 3 years ago on Steinhoff. But there were plenty of minority opinions. Managers who didn't believe the story, who couldn't make the numbers tie up. There were sell-side analysts. Now, sell-side analysts work for stockbroking firms, and they offer their research in exchange for brokerage. Those reports were in circulation, and those are typically available to all asset management firms, large and small alike. So there were enough dissenting voices, I would have thought, that if your job is to analyze a company, and you're doing it with rigor, to take those minority opinions into account in your own analysis. And it isn't obvious to me that that has actually happened.
There's another question here. Jen says, if it cannot be one man who's created this fiasco, there must be, by implication, many more than 4 directors involved. The board who did not apply their minds or competence. But what about people who executed the accounting entries? Any thoughts or comments?
No, that's exactly what I'm saying. That there's not a chance that this is Markus Jooste by himself in the middle of the night. There is a whole team of people implicated in this. And, I would go as far as to say that, absolutely everybody who worked for Steinhoff International, and it might very well be just a group of 20 people, which is a very scary thought, if you actually think of how many companies they bought, that all of those people were complicit. And, on that note, the point you made earlier about, Markus Jooste saying, well, he trusts management, he buys management. Well, that's the biggest load of nonsense, because that's equivalent to saying, I do deals on a handshake. When you buy a company, you send it in a team. You send in your own team of people, and you send in external teams of auditors and lawyers to do proper due diligences of businesses. But, lawyers and audit firms can only do so much. So when you're buying large companies, to do so because you trust management, and that sounds very, right there, I would have a massive concern about how those acquisitions were made.
Theo wants to ask, will the directors be charged criminally?
I'm not, completely au fait with German law, but I think so. I mean, they certainly are in breach of their fiduciary responsibilities. And again, it's German law, not South African law. And in South Africa, it's, we're going through our first case where there is, and I think it's a civil case where the directors are being held liable in the African bank saga. But if there is fraud, then that's a criminal offense wherever you go. If it's mismanagement of a company, that's a different case. That there might be civil cases that follow. But if there is genuine fraud, so the numbers are fake, then that's a criminal offense. And I would assume that certainly the executive team will be charged criminally. And I suspect, the directors are liable. Directors tend to, particularly non-executive directors, tend to underestimate the liability that they carry. So someone very wise once said to me, never become a trustee and never become a non-executive director, because the personal liability that you carry is just too high relative to what you can possibly know about the affairs of the business.
There's some very, very wise words in there. I've heard those statements as well. And it seems as though on this board they had quite a few professional directors who are probably thinking the same way today. Here's a question, or rather a comment from Dion, who says, we've had a lot of bad news this year. What is the good news that we can get out of all of this? Is there any?
Well, look, at the moment, all roads, I used to keep saying for the past 6 months that, all roads lead to December, but really all roads lead to next week. So there might be some very good news coming out of the ANC elective conference. If the right things happen, we can get the country back on track very quickly. So I think you need to repeat that question again in about a week's time. I think that, irrespective of what has happened and what has come to light, the couple of positives in all of this. It doesn't mean that the future of South Africa isn't rocky, which I think it is. But what are the positives? We've got a very strong court system. We've got free media. And we've got unprecedented levels of disclosure happening in South Africa right now. So, Gupta leaks were almost, this kind of, this incredible moment where everybody in South Africa suddenly knew what happened, how it happened, and the media writes about it freely. There have been some major wins. Yesterday with the NPA, was yesterday, Friday, with the fact that, the appointment of Sean Abrahams as head of NPA has been put aside. Yes, he's appealing, but it's an appeal that he's bound to lose. So there have been nuggets of good news in South Africa. I think the fact that we are literally opening all the boils and all the pus is spilling out. Yes, there are no prosecutions happening at the moment. But having said that, if the right things happen next week, prosecutions will follow. And also watch the space, because some of us are working on things which will be announced later this week, which can give all South Africans a bit of hope.
Benjamin says Shoprite Checkers is still listed. Is it a go for our portfolios?
I think it's a solid business. I don't think anything has happened with Shoprite Checkers. If you, other than, obviously the management has changed. But I don't think, fundamentally it's a very, very solid business in, I wouldn't have any concerns. Look, anything right now associated with Christo Wiese would have taken a beating, and it's partly because of sentiment and partly because you just don't know whether any of those assets are, attached and sold by banks. So that's the kind of great unknown. And that's what's affecting some of the share prices. But Shoprite Checkers is a solid business.
And what about a Star or Steinhoff Africa?
Well, that's very much ring-fenced. Again, some solid businesses in that, and you can place easy values on those. Having said that, those are the assets that the banks will sell off first. So here you need to consider, will those assets be sold at market-related valuation, or will it be a fire sale?
There's a question here from Ian Ross. He asks who's on the board, and I've quickly pulled it up. The directors are Dani van der Merwe and Ben Lagranci. They are the two on the management board. Markus Jooste has been removed from the website. The supervisory board, in other words, what we would know as the board of directors, are Christa Visser, Len Konar, who's a ex-accounting professor and a professional non-executive director, Steve Boyson, ex-CEO of Absa Bank, Klaus Down, who has walked a long road with the Steinhoff team. In fact, he employed Markus Jooste right back with Goma Goma was the first business. Thierry Guébert, who was the gentleman who sold 1.1 million shares, or sorry, 1.1 million euros worth of shares. He was the CEO of Conforama, which was the French company that they bought. Angela Krier Steinhoff, who I think is related to Bruno Steinhoff. Tieni Lateghan, former senior executive with the First Rand Group. Jayendra Naidu, an activist and businessman. Heather Son. Heather is a highly respected investment banker who worked in New York and also with Lechai Securities in South Africa. Bruno Steinhoff, the man from whom the group gets its name, he started it by taking furniture from the old East Germany to West Germany to sell before the Berlin Wall fell. Johan van Zyl, the former CEO of Sanlam, and Jacob Visser, who's the son of Kobus Visser. I hope that kind of clarifies that question for you. And then let's close off with the last one. Does Germany have an extradition treaty with South Africa? I haven't been able to check that one out, but I guess it is something that might be looked at.
I mean, that's a very good question. I don't know is the answer. But, extradition treaties are a funny thing, because I was investigating, and you can guess the reasons. I was investigating, whether Dubai and South Africa have extradition treaty in place. And the answer is no, one has been negotiated but hasn't been signed. But that doesn't mean that you can't extradite. It just means that I did a bit of research on this, because I actually wrote an article on this. It doesn't mean that you can't extradite. You can still apply for extradition even if there isn't an extradition treaty in place. And the country can then elect to either comply or not comply. Typically, if there are criminal charges pending, they would comply. So again, I don't think that, I think that if Germany, given the political situation in South Africa right now, and this entire narrative around white monopoly capital, I think if Germany applied for extradition of anyone from South Africa to face corruption charges in Germany, that person would be extradited. They might fight it in court, but eventually they would be extradited.
Magda, I'm going to let you go now, and we'll just quickly close off with the portfolio. But there is one final question from Mary Jane Morris, who wants to know about Naspers. Is there a risk of this company going pear-shaped?
No. Look, I think many things can happen to Naspers, but you need to understand what Naspers is. At the end of the day, Naspers is all about Tencent. And Tencent, is valued at about 2/3 of its valuation within Naspers. So the share price of Naspers only reflects 2/3 of the value of Tencent. And all the other operating businesses in Naspers are actually worth very little. So your worst case scenario with Naspers, and possibly the best case scenario with Naspers, there are many divergent views, would be the unbundling of Tencent shares, provided that one could negotiate the relisting of Tencent shares on the JSE as part of that unbundling. but I think there will be a lot of noise around particularly multi-choice. And clearly, it's again the noise that we don't need, and it again goes to this concept of, corruption has become the institutional way of doing business, because, obviously we have now seen multi-choice implicated in Gupta leaks and in paying of the Guptas via paying for ANN7. So I think there will be quite a lot of negativity and negative noise around Naspers, but really the fortunes of Naspers are not driven by Naspers, they're driven by Tencent in China. And as a technology platform, that's just an exponentially growing company. And, I would be if it wasn't for the ethical considerations of multi-choice, a very happy shareholder in Naspers.
Magda, thank you. It's been brilliant talking with you, and for giving up your Monday evening like this to share it with us, and for being as outspoken as always. And looking forward to that announcement on Wednesday.
Wednesday, it's big. It's big, I promise.
I'll be on the blower to you for sure. Thank you, Magda, for again
Absolutely.
being with us tonight.
Well,
thank you.
bye.
Well, bye-bye, Magda. I'm going to continue now with the update of the portfolio. Let's just allow Magda to go. Stuart, from your side, have you been able to let Magda go?
Yes, thanks, Alec. I've just shut down her webcam and we're all ready to rock and roll.
Perfect. Just to make sure that we're still on our PowerPoint presentation now.
All good.
All good. Okay. Just to go back to the rationale of the global portfolio of the SA Champions portfolio. I wish I was talking about the global portfolio. That's the one that's been growing at 39% compound for 3 years. Wow. This one, of course, has not been doing that, and Naspers has really hurt us. But the idea, not Naspers, Steinhoff has really hurt us. The idea or the rationale of the portfolio is to hedge against the rand by investing in South African global champions. Now, clearly, what we did this year was we've made a few changes to try and settle down things. There have been far more changes than I ever would have wanted, but it is the way it's been. Blue Label was associated with the concerns that went around Net1, if you remember that. And as with the scandal that went there, we decided to get out of Blue Label. That has been a smart decision because we bought Naspers way below where it is at the moment. And then we sold Wilson Bailey after they were kind of stuttering along a little. And we put that into Glencore, which looked like a very good investment and indeed turned out to be. So we started the portfolio with 100,000 Rand on the 23rd of January, and those were the two changes that really worked. Last month, you'll recall, we got real lucky. We sold Brait at 48.60. It's now 38.50. So it would have been really awful to have both Brait and Steinhoff in the portfolio, Brait being another Visa company. The reason we sold it a month ago, we had no idea what was going on, obviously, at Steinhoff at that stage, or put it differently, we believed management at that point. The reason we sold Brait was because of that disastrous investment into New Look. When I talked around to people in London, the feedback was that New Look is, although it was written down to zero by Brait, is probably worth a negative something. Brait's share price has fallen on concerns that what's happened at Steinhoff, because of the ownership of Brait, where Christo Visa is the controlling shareholder, will contaminate the Brait share price as well. We also sold out of Glencore, reason being that it had a fantastic run and that the whole story about electric cars, which was the reason we bought into it to begin with, appears to have been overdone in the mining sector anyway at this point. They're investing heavily in coal and other carbon assets. So we decided to take our profits, and so far it's so far so good. And both of those acquisitions then, First Rand shares at 52.50. The reason we bought First Rand was on the Aldermore acquisition in the UK. It's a big 20 billion Rand acquisition. It gives it now a significant international footprint that we could justify inclusion in the SA Champions. First Rand is, in my opinion anyway, by far the best big bank in South Africa. And then we topped up on Naspers, the idea being that we would have a overweight position, and Naspers in the Swix index is sitting at 25%. So you need to have quite a big showing there. As Magda explained earlier, the reason for our Naspers shareholding is not necessarily multi-choice or anything else that's going on there, but it is a huge discount on one of our favorite shares, the Tencent in China, and we have Tencent directly in the global portfolio. So that's the reason you're buying it at 2/3 in rands on the JSE, 2/3 of the 10-cent price. It just looks like an obvious investment. December's disaster, we took Warren Buffett's decision. What happened with this, when the news broke on Wednesday morning, I started trying to find out what was happening and hit brick walls everywhere. As far as the company was concerned, all it told us was that there had been a disagreement between Markus Jooste's interpretation of the figures and the auditor's interpretation, which is not a good sign, of course. But how bad was that misinterpretation, if you like? Well, the more I started digging around, and I did a lot of work in those 2 days on Wednesday and Thursday, and finally got to the conclusion after talking to lots of people, reading between the lines, that this was really, really bad stuff. It was certainly contaminated. The company, you cannot by any stretch of the imagination call this a South African champion, and we took the Buffett route. When he came across things he didn't like at Tesco, which was to do with accounting anomalies as well, he sold out and took an awful hiding. I think it was nearly $500 million that he lost on it. In our case, we decided to do the same thing. Once I was confident or sure that this was a reputational nightmare, we sold out, and that happened to be at around 6 Rand a share on Friday. The reason we did it on Friday was because there are many investors in the portfolio who are putting in 50 Rand, 100 Rand a month, and they're putting it in different days of the month. And I did not want anyone to be investing in Steinhoff inadvertently on Monday. As it happens, the share price went up a little bit today, but that's not really the point. As you can see in our portfolio, it's really small. We took a 92% hammering. But thankfully to Magda's perceptions, or as she put that into context, if you can get 65% right, you're doing okay. Well, let's hope that this is our one and only last bad one. There's the portfolio. The Champions portfolio obviously is looking pretty sorry at the moment. Fabulous returns from Discovery and Naspers. Now Naspers, had we gone straight for 31% from day one, we would have been in a very good position right now. Of course, that wasn't the case. We've been adding to that holding as we've been selling out of other shares. But even so, our average price, we're showing a 36% gain for Naspers, which being very heavily geared towards Tencent, I'm extremely happy to be in that position. Discovery has been our star performer, as you can see there. Investec Limited, it got contaminated by the Steinhoff fallout. Mediclinic, it got its head up a little bit in the last month. We'll talk about that in a moment. First Rand started well enough, MTN still hanging in there, and the 8% that we were putting into Steinhoff, we're now in cash. So the portfolio is still up, thank heavens, but of course really looking horrible when it compares with the JSE All Share Index, and that we hope will change in time. Just talking about Investec, you can see this is in the past week. Investec started the week just under 95 Rand. It got as low as 83 Rand because of the fear that it had been contaminated by Steinhoff positions, and it lent money to Steinhoff. It's well known that Bernard Cantor, the managing director of Investec, and Steinhoff ex-chief executive Markus Jooste have many interests together in the horse racing field. The concerns that the market had is Investec also badly exposed, and as a consequence, an announcement came out today to say that it wasn't. In fact, the exposure that exists is through its clients who've had on-margin positions and a holding in the preference shares, which in fact have held up quite well, or relatively well anyway, compared with the equity, the normal equities, the ordinary shares, and that's because preference means preferred ordinary shares. So Investec does seem to have had a temporary setback. I'm not too worried about that. It should correct. Similarly, would you believe First Rand as well? The good news for First Rand was the Aldermore acquisition has now been supported by more than, I think it was 99% of the shareholders in the UK. So they're on their way. That deal is on its way. It's a very significant one for First Rand. It's been done very sensibly. It's its first acquisition in some years in the UK, and it'll fit very nicely alongside another company that it's bought, which is in the second-hand car financing business. So the two of them, and doing very well, by the way, the two of them will be highly profitable and give FirstRand a good base from which they can launch their electronic banking, etc. The concern the market has is that FirstRand is exposed to Steinhoff in some way, and hence the share price has come down from over 58 Rand in the last 5 days to where you see it now at 54. Again, we don't have any clarity on that, but one presumes that we'll know more about that soon. Moving on to Naspers. There you see, once again, in the last month, it surged above 4,000 Rand a share. It's come back since then, not on the multi-choice story, but on Tencent. In fact, if you overlay the Tencent China share price and the Naspers share price, the two of them are identical. It isn't. MultiChoice is one of 120 subsidiaries that Naspers has. The reason, and Magda was explaining this, I thought, pretty well, the reason you buy Naspers shares is that you're getting a discount of about a third on the Tencent holding in China. So it's a cheap way into Tencent. And then Discovery has had a little bit of a setback recently in the share price, but in the last month it's done very well. You can see it went above 160 Rand a share. So this is a company that's continuing to attract attention and clearly has performed very well for us. Mediclinic, there's a nice bounce, as we anticipated it might be. If you recall, we were concerned a month ago, as were every other investor in Mediclinic, because they were on the brink of making a hostile takeover bid for Spire, a UK-based company. Spire didn't like the bid, although Mediclinic owns 29.9%, and the concern was that the company would pursue it despite Spire not wanting its attentions. The fact was quite the opposite. The chief executive of Mediclinic is retiring next year, and the board appear to have decided not to go ahead. Well, they did. They decided they are not going ahead with that acquisition. They've withdrawn their offer for Spire, and you can see the bounce in the share price. Very healthy indeed. Now they need to just get the rest of their businesses right. But in the long term, it is a FTSE 100 company, and you can be confident that the Swiss and the Middle Eastern assets will perform. And finally, MTN, which has really been bouncing all over the place. It came down a little bit today. It's at least off that bottom of 110 Rand a share, around the 125s. I think you've got to give Rob Shooter and his team the benefit of the doubt and give them a little bit of time to pull everything together. So there's our portfolio. We are, at this point in time, only slightly up, thanks to Steinhoff. It's wiped out all of our profits. But the reality of it is that it happens in investing, and the portfolio is a long-term investment. I've got my own money in there, so you're investing alongside, and I'm quite happy to take a 3 to 5 year view. And with the way it's structured at the moment, perhaps it is time for us to start considering even greater diversification by finding some exchange-traded funds, but we'll be looking at that in the future. Thanks for joining us tonight on this special update on the Biznews SA Champions portfolio. And it really was fantastic to have Magda Wierzycka, the Chief Executive and founder of Sygnia, on giving us her forthright and direct ideas and views on exactly what went on with the whole Steinhoff disaster. It's not often that we have to talk about these unfortunate things, but anyway, the fact was, when it happens, you need to take the biff on the nose, and I think we've done that. Stuart, from your perspective?
Thanks, Alec. No questions this side, but thanks for the time. I think you and Magda were fantastic tonight. So yeah, and it's unfortunate circumstances, but very well handled, as they say.
Great. Well, thanks to the Biznews Premium subscribers, to the community. We will continue to cover this story every day. I'm actually writing just for Premium at the moment, and there will be a daily update on what's going on with the Steinhoff saga. But as Buffett did with Tesco, we move on, and this is the last time we'll be talking before. Oh no, we have the global portfolio, Stu, on Wednesday. Is that right?
Yeah, Wednesday at 12:30. That's our final one. Yeah.
Back to lunchtime. So yeah, please join us at lunchtime. That's of course a much happier story, but you can't win them all. And thank you again for your contribution tonight. We will be back with you lunchtime Wednesday. Cheerio.